All right, we are recording. Guys, thank you all for spending some time with me this Thursday. It's uh it's a great opportunity to chat with y'all on my journey in trading, which is obviously not where I hope the end goal will be, but the progress that's been made in the last year, I think, has been exponential, and I kind of want to share what I've been doing lately, which is basically building a small cash account with options. Um, we'll kind of keep it loose. I will answer any questions anybody has, but this is pretty much going to turn into like a light TED talk where I kind of go through my background, my history, what I've learned along the way, all the money I've lost doing it, and hopefully, if anything resonates with you guys, like I'd love to chat about it and go into detail with it. And if it's even helps one of you guys out in one iota, then I'm more than happy to have done it and thankful for the platform Avi provided to do so. So, Mentee webinar series, July 2025, building a small cash account with options, Dustin Trevino. Now, if I can figure out how to, okay. So we're going to go through and about myself. I'm about 4 years into trading. We'll kind of go into the ideas, expectations, lessons learned, strategic evolution, my thoughts on the fundamentals of a cash account, my thoughts on the psychology of a cash account, and kind of the grand realization I've come to in the last 6 weeks or so, where technically on paper, even though in a very small increment, I would consider myself a slightly profitable trader, which for the first time in 4 years, I have not been. There's been some massive wins along the way, but they've always been followed by losses. So I, by no means, will say I'm a finished product. I'm actually pretty rough and raw, but I feel that it's come a long way from where it started. And if you guys are anywhere along that timeline, there's probably going to be some parallels that I talk about today that may make sense for y'all. If I say something you completely disagree with, I understand completely. I am not a know-all. I'm just really sharing my experiences and the mindsets that it's helped me develop and what works for me personally. So my path to trading, I graduated in 2005. I'm 44 years old, so I'm getting up there. I graduated in 2005 from Texas Tech University with a bachelor's in marketing. Um, I don't know why, to be honest. I can't remember a single class I took at Texas Tech. I just had a really good time there. Marketing seemed like the thing I was going to do. I was going to be in sales. And you'll kind of see how we kind of tailed into it. I spent 2 years out of college in sales. I always had this habit of going into a job, seeing what my boss made and saying, well, I want more than that. And then I would leave that career and then go somewhere else. And so 2 years of that, 2 different career paths. One was selling liquor and one was selling credit card processing. I get a call from a buddy. He's in oil and gas. He's like, hey, if you can be in Pinedale, Wyoming in 14 days, I'll put you to work and you can make $100,000 a year. Keep in mind, I was making about $40,000 a year at this time. I do talk freely about money, by the way. It doesn't bug me. I used to have a lot, and now I have none. So you'll see me being very transparent about that. It's just because I feel like it's part of the story, and I think it's a big part of trading that people don't discuss a lot, and I think they really should, because it helps people like us figuring things out set our expectations properly. So please don't take it as me puffing, and it's literally just like, dude, I was rich once, now I'm broke and I'm rebuilding. So that's where we are. So 2007, I left finance, sales, and I got in the truck and I drove 24 hours to Pinedale, Wyoming. I got stuck behind a state trooper for the last 8 of it, going about 20 miles an hour because the whole highway was frozen. And I remember the entire time telling myself, what the heck are you doing, guy? like, what are you doing right now? So I get to Pinedale, Wyoming. I think I'm going to get some rest. I think we're going to, rest up and get to work and learn the oil field. I get there. They hand me a bottle of lubricant like the WD-40, and they hand me a Brillo pad, and they hand me a stack of 40 beryllium copper barrels. And I sat there and I polished every barrel for 6 hours straight after being on the road for 27 hours. And it was literally, they were testing me, see what this guy has. As soon as I got done there, I went and took a shower, and then I got called out to the rig, and we sat on a rig from 10 p.m. that night until 6 a.m. in the morning. And we got back home at 6. I got to go to bed for 3 hours. I woke back up at 9. And basically, I lived that schedule for the next 6.5 years. We were on call 24/7. We got paid per rig running. Anytime downhole tools had to be serviced or equipped, we would hop in our trucks, drive 30 miles to the location, service them, and drive back. So 25 years old, no kids, no wife. It's what we did. We had dirt bikes and snow machines. So that's fun. So fast forward to 2011, my wife and I, we had dated in college. I went to go visit my grandmother in New York, went and saw her. We kind of rekindled things, got together, decided it was time to grow up and leave Wyoming and follow the oil field down to Texas. So 2011 to 2015, we ended up doing some stuff in West Texas, doing some stuff in South Texas, North Texas, and then ended up in Houston. We were living in the Woodlands. I was working for a company doing remote operations there and managing their South Texas Gulf Coast fleet. 2015, the guy that had hired me back in 2005 had an opportunity to start an unmanned services company, integrating remote technology into downhole tools. Same footprint we had kind of put some paces behind in 2005. New technology, new place out in West Texas. Hey, you want to throw every dollar you have into this company and let's go start it. I think I had 40 grand in my name, like cleared out 401ks. The whole 9 yards. I didn't have shit. Excuse my language. I didn't have anything. I gave everything I had into it. I think I even borrowed 10 grand from my grandma. So we get up there and we go to Wyoming and yes, we were doing remote MWD. It was a company called True Shot. So we moved to West Texas. I left my wife in the Woodlands for 8 months. We had my 2-year-old daughter, and she was 7 months pregnant with my who is now 10-year-old son. She stayed behind for 8 months. I went to go build a company. I lived in a stallion trailer for 8 months in Northwest Odessa, which is pretty rough area, on a 3.5 acre yard. And I put my head down and got to work. So we rode really hard for 4 years, scraped by for 4 years, paid our mortgage, paid rent for 4 years, racked up a ton of debt for 4 years. And then I got to see everything come together. I'm sorry, 2 years. And then I got to see everything come together. We went from getting by to having 70 employees, 50 were contract, 20 were W-2. I was the president of the company. I went from having nothing to my name to at peak was making about $80,000 a month every month for about a period of 24 months. I thought we were there. I thought we had made it. Here we go. This is what all the grind was for. We're remodeling houses. I became that a-hole. So instead of being responsible, I'm buying BMWs and God knows what else and $200,000 remodels and just burning money as quickly as I can get my hands on it. 2019, COVID comes through. Business partner wants me to let the entire staff go. I don't agree with that sentiment because twofold. One, I'm going to have to pick up the slack. And two, they've worked really hard. Long short of it, we get in a pissing match. I lose said pissing match. I get sent home on leave. I get fired 7 days later from a lawyer via email that I'd never met from a company I built. So I ended up with an 18-month non-compete, a settlement that was about 10% of what it should be worth. At the time, the company was worth about 20 million. I settled for about 100,000, 140 really, but 50 went to the lawyer. And I was basically told, unless you want to dogfight this for the next 2 years, take it, get your non-compete out of the way and go do something else. That's when I learned the real hard lesson in life that really fair isn't always fair. It's what And it's not a sob story. It's just I learned sometimes you just got to go with the flow and not be so vocal. And sometimes, things just happen the way they happen. So we move back, and that's when I get into barbecue and day trading, because at this point I've got some savings and I've got a big barbecue pit. And that puts me to where we are now, 2020 to 2025. We've been in a rebuild mode. We have started a barbecue joint. We've been featured in the 2021 Top 50 Texas Monthly, Next 50 Top 100 Barbecue Joints. We have been fortunate to find a pretty good footprint of success. The money is not the same. I did do a stint for 2 years back in oil and gas. I absolutely hated it. So I've left that behind. And I have been a losing day trader since 2020, and I'm just now starting to see what I hope is light at the end of the tunnel and some profitability and honest expectation with what I think I can get out of this field. Sorry to be so long-winded. Okay, so day trading, I just kind of broke it down into 4 years, and I'm going to kind of chat about my experiences in those 4 years. Year one, optimism. Andrew's book, How to Day Trade for a Living. I read it. I'm going to be a day trader. This doesn't look that bad. We've got multiple strategies, join BBT, DOS Trader Pro, breakouts, watching everybody on Twitter, following all the market news, every indicator under the sun, very minimal understanding, never went to sim, maybe simmed for a little bit, went straight live, lost 10 grand. So year one recap, and where I think a lot of year one folks, my overall thought process for y'all would be, you don't know. Nobody at 1 year knows what they're doing. I had no clue. I still don't, but I definitely didn't after 1 year. There were some wins along the way, but when I go back and look at those charts, like I was talking to Avi earlier, I don't know how. So my real thought process with what I'm doing now is I really wish I would have simulated for a year. But in my mind, I saw day trading as a get rich quick scheme. I saw everybody dropping these bombs and these $30,000 and $50,000 hammers. And I'm thinking, okay, I've run a company. I've been a millionaire before. I'm sure half of you guys are doing this thought process. I've been rich before. I'm in a rebuild. I'm an entrepreneur. I'm smart. I can figure this out. And it's not going to take me as long as it takes these guys. I will say right now that was the most backwards logic set that I could have possibly had for day trading, because more than any industry, including barbecue, you literally just have to put your paces in here and you cannot rush the process. And that's what I did for year one and year two. So we creep into year two. It's where the arrogance comes in. I go to the San Francisco, or the conference we do in California. I can't remember what was that. So I go meet everybody. I'm convinced I'm going to be part of Bearable Traders at this point. I'm delusional. I'm like, man, I'm going to become a moderator. I'm starting to show some profits. Like I know what I'm doing. I had no clue, and I was bleeding money. My strategy was over complex. We still had indicators everywhere. I was live trading. I was using $50,000 in a margin account with Interactive Brokers, which, looking back on it now, mortifies me. I was trading equities. I would have these small wins. I would have days where I'd win 1,500, 2 grand, 2,500, but I would blow up. My worst loss single-handed was about 97.50, and that broke me in half. Big setup, had my own room dedicated to it, the whole 9 yards. I lost 30,000 in year two. So any year two folks that are struggling, if I could go back and do it all over again, I would go back to simulation or a cash account with options, because I had no business throwing around the types of positions that I was throwing around. I had no true fundamental understanding of the market and how it operated. I was honestly, if I look back on it, gambling is what I would call it. I thought I was doing it right. I wasn't. So we go into year three. Year three is where the frustration sets in. This is where I almost quit. I've worked with BBT. I've done the boot camp. I've worked with Eamon, and I just started working with Avi, but like barely. And I'm starting to tail down my strategies. Um, Eamon was very technical, so I was very technical heavy. And then I got to Avi, and now what Avi was teaching me then makes so much more sense now, because it was more of like, hey, you're overthinking this. I remember going to him and I had this huge, and I'll find a screen cap and I'll put it up. I had this huge daily tracker, and it's every trade, every day by percentages, R's for the week, the whole night. I track none of that now. I'm being honest, I don't. I remember him telling me, he's like, man, it's too much work. You're distracting yourself. And I was like, okay, fair enough. And he's right, because now I don't mess with it. I started switching to naked charts. I was still trading live equities. I had scaled down to a $30,000 account with margin. And I had my first profit taking month that year, but then I followed it up by blowing my account up. And I lost 15,000 that year. If I could go back to year 3, I would go back and do a cash account, or I would continue to simulate, because there was no patience for the market in year 3. There was no understanding of the market's going to do what it does. And we'll get more into that later. Year 4, that's where we currently are now. Working primarily with Avi, working with you guys in the group. Strategy is simple. It's consolidation, breakout, Fibonacci levels. I'm live trading an options account that I started with $1,230. I'm trying to keep my losses small, especially after last week. That was a real big lesson for me. I am risk averse. I feel like I have a better understanding on the timetable of what it's going to take to get to where people like you are, to get where the Avis of the world are, and where the Andrews are. I can see people hit banger trades like Ray, and I don't want to replicate it. I want to replicate the amount of time it took to get to that level now. I see the time and effort that it would put into building those accounts and scaling them up. Whereas before I saw it, I would take money, deposit it, and try to replicate it. And that's where I would end up losing a lot. I didn't have a respect for the game of trading. And I feel like today that's been a big shift in my mentality, is that I truly respect how much trouble you can get into in the markets. But I also truly respect that the people that are actually finding success in the markets have been getting their tails kicked in for years and are finally putting it together and are working every day to maintain that and not give it away. That's what I feel when I say understanding. That's what's changed for me, is that I don't see this as a get rich quick scheme anymore. I see this as something that I'm going to compound and build over years. And hopefully one day I'm going to look up and say, oh shit, I got $1 million sitting over there. Hell yeah. Cool. I'm still working, but at least I don't have to worry about a bill if something comes up. Whereas for the previous 3 years, I was like, okay, if I can make $100 a day, I can do this. If I can make $500 a day, I can pay bills. If I can make $2,000 a day, I can do this. That's not how the market works, in my opinion. It just doesn't. I mean, let's look at the last 2 weeks of trading. I mean, we were dropping bangers, and the market completely shifted in the last 2 weeks, and the scalping's working. But Avi hasn't taken a trade in 2 weeks. I'm taking small scale trades. It's just not, it's going to do what it does. And so I'm a firm believer in having the market there as an investment tool, but also having a steady income that you can control with time, work, and labor that will take the pressure off it and also keep you rolling when the market just doesn't want to mess with you. Currently, I'd say break even, slightly green based on this account. All right, sorry for getting long-winded. Okay, so fundamentals of a small account. I think you've got a couple big things: risk management, expectations, in the money versus out the money, advantages and disadvantages. I'm not going into heavy detail here. I'm basically just going to talk about my experiences with it and what I find work well with it, what work poorly with it. To give background on why I went to a cash account, I kept funding and losing, funding, losing, funding, losing. It finally hit me like a ton of bricks that, man, if I can't build an account from 1250 up to 10,000, then what am I doing taking 10 to 20 to $30,000 of money I built elsewhere and dumping it into account and trading with it? That's just my personal realization. That was the mentality that I'm approaching this. Does it drive me nuts taking small positions all the time? Oh, of course. Is it awesome to see these big wins? Yes. Is it hard sometimes? Yeah, of course it is. But in my mind, I have to prove to myself that I can do this before I'm going to let myself risk any more of my family's capital at this venture. So, buying power. That's bottleneck number one. How do you grow an account without endless buying power, without the endless buying power margin account? One thing to step back with, I don't know how familiar everybody is with cash accounts, but those of you that aren't, somebody mentioned that the other day. So a cash account, I don't have margin. I have cleared buying power. So I've got $2,100. I can buy $2,100 worth of options, and that's it. So I don't have to deal with the pattern day trading rule because or at least in the US, that's how it works. I don't have the PDA or PDT, the PDT rule to deal with. But my limiting factor is that as soon as I burn up all my buying power for the day, I have to wait the 24 hours for it to clear and reset for the next day. So when it comes to buying power, one thing that I've noticed is you have to be very, especially in the beginning, when it was $1,200, that sucked. You have to be very, not so much risk averse, but very, very buying power averse. Yes, I could go in right now and take a 10 or 15 contract position on my first trade all day. But what I've learned that does is it takes the mindset of the market providing plenty of opportunities, and it puts you in a scarcity mindset. So in the terms of buying power, you have to make sure that you give yourself the 2 or 3 chances you need to get the market to be able to produce what you want. Case in point today, I had 2 losers to start the day off. But my third trade was the winner. It paid for the previous 2 and left me on profit. If I would have gone into the first 2 trades at heavier position, I would have run out of buying power and I wouldn't have been able to do what I'd need to do, and I would have ended up red for the day. And not that that wouldn't have happened anyway, but it would have made it a lot. It would have put me in a scarcity level. So you can only take advantage of the abundance of the market if you give yourself enough buying power to take advantage of the abundance of the market. So if I know a position I want to be in is between 2 and 3 contracts, and I know contracts are $250 a piece, that literally gives me 2 to 3 contracts per entry. Now, if a trade works and goes my direction, I will aggressively add to it if I decide that that's probably going to be the trade I'm going to run with for the day, and that's probably where I'm going to cut it off. But as far as initial entry today, my first 2 trades were 1 to 2 contracts. Why? Because if they didn't work out and the market was kind of crappy today, I wanted to make sure I gave myself that chance. And I'm glad I did, because when Google worked out, I went in a little heavier as it continued to work, and I was able to to put in about a 2.5 hour trade, which nothing crazy, but it worked. It was a good day for a crappy day. Can I do this without scale? My mindset is yes, a system can work with or without scale. What I'm trying to do small is I'm learning to dream big, but I'm trading small. I'm watching you guys. I'm watching Avi. I'm looking at these $100,000 trades. And what I'm doing is I'm taking that $100,000 trade and I'm looking at how many contracts were in there. And I'm looking at what the average net gain per contract was. And that's what I'm running in my head to compare myself to what the guys I look up to are doing. Does that kind of make sense? So if I see a 4,000 contract position and I see a $100,000 gain, like simple math, right? If I see $40 per contract gained, that's the metric I'm holding myself to, plus, targets and everything as well. But I had to make sure that I found a way to mimic, and not so much mimic, but to compare myself to what well-established traders were doing, to tell myself that I was heading in the right direction, and whether or not I was being too risk adverse or not, or way too risky. And so that was something that I started doing, is looking at the little things, like how many contracts do you have? What did you take out of the trade? And you can't really pin it down all the way, but you can get a decent idea of what it's doing. And what I found with a lot of heavier accounts, and if I'm misspeaking, then I apologize. But what I came to terms with was like, I started looking, I was like, there's very, very risk averse, stringent criteria in place for all the heavy volume players in the market. And that's how I want to be. And I'm here practicing that with 1, 2, 3, 4, 5, 6 contracts. And if I can get it down here where the stress levels are lower, then hopefully I can scale that up. And then I've got a proven system. So can you do it without scale? 100%. Why do you need a $50,000 trading account to prove to yourself you can trade? I did it for 3.5, 4 years. Now I feel better about my trading than ever, but I also know that I'm not ready to scale up because I tried that last week and scissored my account by 70%. So that's one of the things I think a small account forces you to do. It forces you to really be honest with yourself and evaluate your performance without the help and aid of excess buying power that can get you out of a jam sometimes and get you in trouble sometimes. So this goes to what I was saying. What do I learn by trading small? That you can build something over time. You begin to understand the biggest traders have accounts that were built just like yours. There's a different approach to built versus bought. I respect this account, this whopping $2,200, so much more than any $50,000 account I ever funded. I'm not saying it's wrong or right. I'm just saying that, like, I really want to protect this thing. It's like a kid. I want to watch it grow. I don't want to blow it up. If I start feeling myself be out of it, like, I'm going to try to step back as best I can. Last week was hard for me because I felt that I was disrespectful to the work I put in and to the account that I was building. And so this week, even though I really haven't made much progress, I'm really working my way back towards maintaining the mindset that got me to where I did double the account in 2.5 weeks or 3 weeks or whatever it was, right? Does anybody have any questions on the actual fundamentals that I might or might not be able to answer as far as like rules and regulations before I go to the next screen? Cool. Live on percentage. Forgot about that. Live on percentages. Today was $35. But I had to look at 1.4%. The other day when it was $100, like I had to look at 6%. And the way I trick myself into not getting encapsulated by money is I look at the percentage. If I have a 10% day, I'm thinking like, man, what's it going to be like when I have $100,000 account and I can nail 10%? Yeah, dude, that's 10 grand, right? I mean, that's, do I move any profit beyond initial amount of this account? No, not right now. No. I last week sent Avi, and I'll be very transparent with you guys. I sent Avi a message. I said, I think this is it. I think it's clicked. Famous last words. I started looking at this like a cash account. I'm going to start going higher on position. I'm going to start drawing money out of it. It wrecked my entire mindset, and I damn near blew the account up. Now I'm looking at this like nothing's coming out of this account. Stretch goal 2 is 4,800. Stretch goal 3 is 9,600. I have 3 stretch goals. First was from 1,200 to 2,450. We got there, and now we're drawn back. We're trying to get back there. Next is 4,850. Next will be 9,650. Once we get to $10,000, I think that gives me more than adequate buying power to play positions that I want to be in. And at that point, I'll be having discussions and evaluating what to do moving forward. But no, I don't plan on taking any profits from the account. I want to prove to myself that I can actually keep those profits in the account and trade accordingly and keep maintaining my position size, even though there is excess buying power sitting there. So whether I can or not, that remains to be seen, but that's my goal with this account. Yeah, percentages. Don't look at the $50. Don't look at $100. If you got a $1,000 account, you do a $100 trade, look at it. You made 10%, dude. That's awesome. $50,000 account, that's $5 grand or 500, whatever the numbers is. My math sucks. But you get what I'm saying. Like, look at the percentages. Like 2 to 3% a day is awesome. Today was 1.4% on a crappy day in the market. I'm happy with that. And then the way I look at it is if you protect yourself and hit those little dink and dunkers, there's that one day where you're going to hit a banger, like that $400 or $500 trade on Tesla last week. And then you're like 15%. And then you have a monster week. So Sorry, I'm bouncing around. We'll get it to there. So that's how I'm training my mindset. I'm training my mindset to look at percentages as opposed to dollars. The rule of content. I'm teaching myself to be content with things. Today, I didn't like where I exited my positions, but I had to stick to my goals, and I had to stop and reset myself and say, hey, man, be okay with it. $50 is $50. It's green. It could have been minus 110. Be content. Be okay with it. Does it work every day? Hell no. Never works. I always want more. We all do. But as long as you're aware of it and you know that's human nature and you're working towards it, you'll be better every day. And if you can get 1% better every day, then you're on the right path. Patience. Good gosh, guys, patience. My patience has shifted so dramatically. I don't even look at the market half the time because I'm out here making sausage or pulling turkeys off the pit. I'm not in a hurry to get into positions. I don't like the market for the first 15 to 20 minutes, even 30 minutes. Like, it's stressful. It's stressful. That's the best way I can put it. It's terrifying. Like, I don't want to do it. Like, unless there's something, like, if I'm entering a position in the first 15 to 20 minutes of the market, it's because there's a setup that's so perfect. I am pissed off I have to take it because I don't have a choice, because it meets every requirement I have and I have to do it. And I'm going to be biting my fingernails the whole time because I know that thing can swoop so quickly and kick me in the toe. So patience is key. Let it slow down a little bit, especially if you're playing with options. Miss one, miss two. Today, I got into what I thought was the Tesla drop. I picked a low volume option. Learning mistake. It didn't fill. I was like, oh, hell yeah, here we go. It was like a $4 move. But then I look and I see my little line over there, my limit line, and it didn't get filled. That sucked. I wanted to jump right into another position. I had to stop. I had to go step outside, play on the barbecue pit for a minute, reset myself, and come back and find patience, find that Google trade, because every bone in my body wanted to chase. So what I'm trying to get to is that, like, everybody feels the same emotions, man. You just got to learn not to act on them. And I think that's what's changed in my 4 years of doing it. And that doesn't make me a better trader or worse trader. It's just I've gotten my tail kicked so many times that I've learned, like, there'll be another one. And sure enough, there was another one. Took a $2 move. Okay. Let me see. Where are we here? So stretch goal one second here. There we go. Sorry, guys. I got a little turned around. Okay, here we go. Yeah, so live
Dustin,
on percentage.
You gotta reshare your screen. Looks like your screen share went dead.
Oh, my bad, guys. Give me 2 seconds.
Mm-hmm.
Sorry. We good? There we go. Okay. Are we there?
Yes, good. Cool.
Okay, cool. Okay, so I got ahead of myself. I clicked a button by accident. So the psychology of the account is what I really wanted to hammer on and get long-winded on, which I've been doing. And thank you all for dealing with my long-windedness. What are my goals? To set small stretch goals, to get them even in setback and continue with my current goal. So I got to my first original double up of 2,800. I am now below that, right? But I haven't stopped with my second stretch goal. Goal one has been achieved. That's out of the way. There's a check mark on it. 2,400, I'm sorry. Stretch goal two is 4,800. That is where I currently am right now. So my bead set is at doubling the account again at 4,800. So I am taking the mentality of that's where I'm going. That's what I'm doing. Being honest with your skill set. What I mean by that is all of us on this thread, on this call, we're all at different levels, man. You've got to be honest with where you are. I'm not Avi. I'm not Gurinder. I'm not Ray. I'm not Mark. I'm not Ryan. So my successes need to be judged differently by my skill level, my entries, my thought process. Like, I've learned I have to be honest with myself and saying, hey, dude, like, that's where I want to be one day, but I'm not there yet. So I need to tell myself, hey, dude, yeah, you didn't hold out for a 5-hour trade. You didn't have enough patience, and instead of beating myself up, say, cool, whatever. I still got a 3. And you know what? Avi's been doing this for 7-8 years. This guy's been doing this for 7-8-10 years. I'm good with that. Like, I'll be there one day. And that's kind of how I approach it now. I do get hard on myself when I make mistakes, but I always have to come back and remind myself, and I urge you guys to do the same. Be honest with your skill set, man. Like, don't try to be what you're not. Take positions like that feel okay. If you are like this and terrified and your fingers on your mouse like this, you're trading too big. That's just my personal opinion, because that's how I feel. And once I scale back down to a level I'm comfortable with, everything becomes visible again. Price action makes sense again. Levels make sense again. Ads, partials make sense again. Everything's just chill. I get in, I put a trade in, I finish it up, I get up, crack my knuckles, and I go back to cooking. So if I don't feel like that, then I know I'm being too aggressive. Last week when I got sliced up, I felt terrible every day I traded. And it was a real firm reminder that my skill set currently, just because I had traded with more before, it doesn't mean I'm ready to do it now. And I'm not. And so I scaled back. And even though this week's been kind of a grinder with market conditions, I'm pretty comfortable. My stress levels are good, and my mental is in a pretty good spot. So does anybody have any questions with like the psychology of the cash account? Like what you battle building it up, what I'm kind of babbling about? Okay, cool. Go on to the next one. So stretch goal 1 was from 1233. We added a fund that put me at a net at 34.33 at my peak. That put my net at 29.33. I am now at 22.15. The session highlights, I had a win rate of 83%. My average was 2R. I was hyper conservative. We'll go over strategy in the next slide, but pretty much with the cash account, the way my mindset shifted is I understand that the end goal would be to holding positions, holding through Fibonacci levels, setting 3 to 5R targets, finding your trouble spots on your 30-minute charts, and maintaining the discipline to hold. The issue I find with the cash account is I think there's a lack of flexibility with a lack of buying power. So if you are in profit, what you'll see in my strategy as it currently sits is I'm kind of converse to what most of us are doing and to what I've been doing for the previous 3.5 years. Why? One, for me, it's more comfortable. I prefer a higher win rate. I've just learned that works for me. Two, $100 makes a bigger difference in a small account than it does on a big account. But it also sucks to watch a trade go up 100, $150 and then not take any of that off the table and let it come back and lose. Now, if I had an equity account or a margin account with additional buying power and a little bit more scale that I could access, then I could afford to chase a little more and lose a little more, because the percentage I would need to take from my base account equity would be so much more minuscule that the losses wouldn't hurt. But when I'm playing with $2 and $3 grand, I learned quickly last week that I'm going to have to keep my percentages to 3% per trade, 9% total per day, max loss, which is basically $60 a trade. So today I was down 60 on trade 1, 45 on trade 2. So I was down 105. Trade 3, I did 160. And I ended up plus 54, which after fees and everything netted to like 1.45%. Session lowlights, post-call drawdown trading session, win rate 28%. Difference in mentality, the average was a minus 4R. Strategy went from 2 and 3 contracts to 10, because why not, right? Immediately scissored my buying power, immediately went from an abundance mindset to a scarcity mindset, in the sense that if that trade didn't work, I knew I couldn't take another trade because I had maxed my buying power out for the day. So guess what I ended up doing, fellas and ladies? I ended up holding trades. I ended up watching a trade go up to a trouble zone on the 1 minute chart and start to stack out reds and whites, where I would normally start scaling my position, set my stop loss to break even, and say, hey, if it works, it works. If it doesn't, it doesn't. Well, now I was like, nah, it's got to work. Like I don't have another trade today. And my mentality suffered. And so I would hold it and I would watch that trade go up about 150, 170, and I'd watch it tail all the way down, and I'd watch myself hold out and hope, and I'd watch myself go below break even, and I'd watch myself go to stop loss. And the next thing you know, I lost $300-400. And that is 100% the trading trap. Trying to do too much with what you have. A small account, it's hard to get in trade, not working out for whatever reason, then not being able to get back. Yes, 100%. And what I will tell you, what I learned quickly is I have to, no matter what, keep my position small enough, Kyle, to give myself 3 shots. Today was a prime example. If you look at that screenshot I put on there, 3 shots, and I was able to get out of the day. Whereas somebody with margin or a professional prop firm trader, they will trade all day until they swing things around because they have the buying power. I don't have that luxury. So I have to be hyper conservative. I have to be hyper conservative when identifying losers, and I have to be hyper conservative when identifying what I'm going to consider a winner and what profits I'm going to take off the table and when I want to take all risk off the table. So I gave back 74% of the gains, took the weekend to reset, and realized that the end issue was that I was trying to do too much too soon. I was putting too much stress on every trade. I basically zapped all the abundance out of the market, and I made the market a scarce environment because I was only giving the market one chance a day to let me make money with it. And that is not a good way to trade. So the grand realization of small account trading: risk versus reward in small accounts is drastically different. I am setting every target on a 3 to 5R across the board. That's Avi has that driven in my head till the cows come home. But what I'm doing different now, and I'll show you in this next slide, is the second the trade works for me, if I've got 2 or 3 contracts in it and it starts stalling, where old me would have sat there and waited to see if it was going to go or come and have my stop loss where it is, be it at 10% or, my $60 stop loss, wherever I set that at, and using the equity chart to kind of set it as a level I was comfortable with, I'm taking profit. I don't care. I'm taking profit. If I'm up $150, I'm looking at that, and I know you're supposed to separate from money, but I'm not even looking at the money. I'm looking at the chart. If that chart is staggering out on me and it's not moving, I feel like I've seen it enough times to know the story. I'm like, I'm going to sit here and hope, and I'm no longer trading on fundamentals. I'm no longer trading on price action. I'm trading on hope. And it's just like drilling, and I don't know, you guys are oil field, but they say never drill on hope. Never trade on hope. The second that thing starts stalling, if I've got 3 contracts, I'm taking 2 contracts off and I'm setting my stop loss to break even. That's it. And in my thought process, if the trade's meant to work out, it's going to work out. And if it goes my direction again, I can add a contract back if it makes sense. And if it doesn't, screw it. I'm done for the day. I got 50, $60, 2-3%. I'm going to get back to doing barbecue. And then if I take that $60 and I do that 3 days in a row, and then one trade just actually works out perfectly, then boom, I've got one banger, and then I protected my equity for the last 3 or 4 days. So what ends up happening is when I'm doing it the right way, I'll have a $30 day, a $60 day, a $50 day, an $80 day, and then boom, I'll bang out a $350 trade. And there's my week. Instead of what I used to do, which is minus 100, minus 60, boom, plus 1,000, minus 200, minus 500. So that's kind of what's changed in this account. Will it stay the same as it grows? Probably not, because percentages will become less, and I'm going to have to carry positions into I'm going to have to carry bigger positions further to achieve my goals. In a cash account world, every gain is beneficial, no matter how small. Conversely, every loss not controlled is detrimental. My goal every day is to control my losses and keep them where they are. And anytime there's a gain, to maximize it. Yeah, what's up, dude? Is there a hand up?
I think you're good to go. Go ahead. Carry on.
Okay, cool. All right. 1 to 2 hour trades will make for most of your days in a small cash account. I'm shooting for 3 to 5s, but I'm settling for 1 to 2s every day. Today was a $60 risk and it was a 2.5R, and it covered the 1.65R that I lost up to that point. If a trade is going to pop 3 to 5R, it's going to happen whether I'm there or not. And that's something that's really hit me at home. I feel I'm good enough with entries and exits now to know that if there's a position that meets all my terms and it's going to go, it's going to go. I have absolutely no control over that. My control is when I'm going to take profits off and when I trade realistically versus hopefully. So to be there, you need to protect every entry and take every little dollar you can. Again, this is contrasting to the mindset of what we currently do. This is where my head is on this small account, and it'll probably shift as we grow. Patient entries are crucial. If you enter early, exit, come back later, dude. That's why I talk about doing 1 or 2 contracts. Start with the contract. If you get into that chop too early and you're just watching it chop and Zeta's kicking your tail, call it, pull the position, wait. 9 times out of 10, you'll wait, and then you'll get up and you'll come back, and that thing's still chopping around 5 minutes later. And you'll be like, man, I am so glad I didn't sit here and stress out. Because 2 things. 1, you're going to lose contract value, and 2, you're going to diminish your mental equity. You're going to get toasted. It's exhausting watching choppy price action when you get into early. So just something to think about. When the markets shift outside of your favor, just don't trade. There's no need to. I learned that the hard way. It took me a whole week to figure that out. Wait until all your terms are met. When all your terms are met, your trades will work. When all your terms aren't met, your trades won't work. You'll start questioning yourself. You'll start questioning your psychology. You'll start questioning your environment. You'll start questioning distractions. It has nothing to do with that. Guys, you can see behind me, I am trading in the closet of my restaurant with 1 screen and an old beat up TV screen that my kids used to use. It's like 1080p and I can barely see it. And I've done some of my best trading I've ever done up to this point in this closet. I've also done some really bad trading. It had nothing to do with the closet, nothing to do with the environment, nothing to do with distractions. I'd spent all these years trying to create these perfect environments with smelling sauces and senses and all this stuff. The truth of the matter was, when I'm trading within the bounds of my limitations of skill set, it's comfortable. When I start pushing those limitations, it gets uncomfortable. So be able to recognize when you're uncomfortable and really have a conversation with yourself and say, why am I uncomfortable? And 9 out of 10 times, you'll probably find you're either oversized or you're taking positions when all your terms aren't met because you just want to trade, not necessarily because that's the best trade to take. Your sizing bounds in cash world should include the ability to control loss to 3% and the ability to control the size of allowance for 3 trades per day. We talked about that already. Give yourself opportunities. Don't try to go in and hit bangers, because even though you see them on Wall Street bets all the time, they're few and far between. And what you're going to end up doing is sitting on the sidelines or playing in your sim account and watching the trade you should have been in go that you could have been in had you given yourself the time to do so. And the big one is, if your terms aren't met, don't trade. If they are, trade within your bounds, trade within your comfort zone. If I can get myself to do this every day, trading would be the most comfortable thing in the world. If I literally can just mentally only trade when all my terms are met and only trade when I'm comfortable trading and grow that comfort zone over time into bigger scale, then to me, I feel like that's a formula for success. Strategy, real quick and simple. First thing I do when I open the screen every day, DOS has a specific RVOL. I looked it up the other day. You can Google it, DOS RVOL formula. It's different than all the other platforms. I've tried it on different platforms. Whatever it is, bro science. I don't know why. If it's between 90% and 200%, I tend to trade about 80%. If it's below 90% or above 200%, I tend to lose about 80%. That's literally how I use it. If I have the Mag 7 and SPY up, I'm literally immediately, once the market opens for the first 10 minutes, before I look at 30-minute charts, before I look at anything, I'm looking at that RVOL. And anything that's not between 90 and 200, I don't even touch it. I hear everybody talking about it. Like today was NVIDIA, but it was at 64%. So I just didn't even look. So I didn't bother tempting myself. Today, Tesla was within those bounds and Google was within those bounds. So I traded Google and I missed my entry on Tesla because of a lack of a fill. If anything, I think it just limits my viewing screen. It keeps me more myopic and helps me concentrate. Avi levels, what I've shifted from 3 weeks ago till now, Avi levels must be at least $1 spread. If it's lower than that, I kick the vehicle. So if you're 40, 50 cents on the Avi levels, there's not enough move in there to play with options, in my opinion. And my opinion is formed by getting my tail kicked in for 5 days straight last week. So I don't do it. So when I looked at Tesla today, same deal. It was at about 100 to whatever the RVOL was. It may have been a little high, but all the spreads were at least $1.50 to $2. Same with Google. And so those are two terms of mine that were met. So I looked at both those tickers. I only enter trades between 9 and 11 my time, which is basically 10 o'clock market time to 12. I try to give that first 30 minutes to let things settle down a little bit. Sometimes I'll get in a little early, like this one I exampled at 9:45. But for the most part, I really try to avoid that first 15 to 20 minutes. Like, I just don't like it. It's too fast. It's uncomfortable for me. I eventually see myself delving into there as I get more confident and get more buying power, get a bigger account, and have a little more room for error, margin for error. I can see myself getting a little more aggressive with opening moves. But if it's uncomfortable, I won't do it. I set targets based on Avi levels and areas of trouble on the 30-minute chart. I just look left. It's nothing that we're not all doing. I look at the weekly charts, sometimes the daily, but mainly the weekly, and then I'll go to the 30, and I'll look to my left, and I'll look for any areas of stagnant price action, and I'll basically use the Avi levels, but I'll find anywhere in between there. And if you look at this NVIDIA chart, you'll see these little yellow lines. Some of these are my stop losses and my entry areas that I'll use, but I'll also, on the 30-minute, which I don't have displayed here, you'll see my 30-minute charts on my screenshots. You'll see like mid-Avi level, there'll be areas. If you look to your left, that's typically a spot of stagnant price action. And so if I start to stall out there on the 1 minute, I'm going to start partialing and set my stop loss to break even, because at that point, I'd rather take a little bit off the table. And if it goes, it goes. If it doesn't, so be it. I do look for I enter only if a 3 to 5 hour target is feasible. So I do like to use the Avi levels for targets, and I do like a 3 to 5 hour minimum. Primarily, I shoot for 5 hours. If there's a really cool setup on a 3, I'll take that as well. I don't ever get there. Rarely do I get there, but I at least set the trade up for that, and I set my stop losses accordingly. I do base all my stop losses and my targets on the equity, on the underlying equity. I really only use the options chart to set stop losses and add and remove contracts for positions. I look for the break of the level, a retrace, a tight consolidation, enter on the break of a level. I copy what Avi does. It's a great strategy. I don't think there's any way or reason to get it more complicated. There's a couple things I look at differently for what make me comfortable enough to engage the strategy, but I think it's a great way to trade. It's simplified everything. And I'll be honest, when everything's met, it pretty much plugs a solid 75 to 80% every time, as long as I'm willing to take profit off the table and let some profits go. So, so basically, I take partials and set a stop loss at break even the first side of trouble on the 1 minute chart. You'll typically get your big pop. So if you look here on NVIDIA, you'll see the entry at this 165.36. You'll see where you had your level, and then you'll see where you had your consolidation. Then you see your pop. Your pop comes up there, and that's right about 950. And then you kind of get some pullback here, some back and forth right here. That's where I start taking partials off. And then you'll see it kind of stags, goes up and down, up, down, up, down. You'll see I start taking more position off. I set my stop loss to break. I add to position, set a stop to break even. My thought process is down here at about 956. And keep in mind, I'm not good at adding yet. That's definitely something I want to work on with Avi. But I'm looking here. I'm like, I'm going to add back to it, set my stop loss to break even. If it takes off, cool, I'll let it run and do what it's going to do all day. If it doesn't, I've already taken some decent profit off the trade. I'm good with it. That's the only trade I'm going to do today. And that's pretty much how I approach every trade now, when I'm thinking clearly and correctly for me personally. I trade the price action, not the P&L, and I definitely don't trade my account. If it's stalling, it's stalling. I protect some gains and I eliminate my risk. And the way I look at that is I looked at some larger account traders and I noticed, and I could be wrong in this, but I noticed that it seemed like a similar mentality. Like you take the pop, you go there. If you've got tons of contracts out, people are protecting their losses and mitigating risk right off the chute, which is allowing to take these bigger positions. I know that's not how everybody does it, but in my head, I feel like that's how I would be comfortable doing it. And if I can do 5 or 10% at this scale, I would be, in my mind, perfectly happy at 10% on a much larger scale. Sorry. And then the biggest key that I keep in my head at all times, if the trade's meant to work, it's going to work. And it usually does so pretty easily. If it's a hard trade, it just probably wasn't a great trade. It doesn't mean that I was wrong or my terms weren't met. It just means the market just didn't feel like making it a great trade that day. So I take some profit out of it. I set my stop loss to break even, and that's it. How do I use the volume on the option chart? Honestly, I am so wormy with options, and wormy is an oil-filled term for rookie or noob. I like to see a lot of volume, and what I do is I look at an option I can afford 2 or 3 contracts of. So today there was one that was $2.25. I went to the one that was $1.25 or $1.45, but the volume before it was 11,000. The volume of the one I wanted was only 3,400. Well, that's how I missed that Tesla fill today, because I tried to click on a low volume contract. So I try to just stick to the higher volume contracts that are within the realm of my target. I'm still working on that. I do juggle the in the money, out the money. What I have found is that I'm better served most times to take a $2 to $250 contract that's right outside the money and let it get into the money. And what I'll do is I'll look back over the contract, the option contract. I'll look to the left of it, see where it peaked, see what price action it peaked at. I know data is not involved there, but it kind of helps me get an idea of what I could do with that vehicle versus getting something way out of the money just because it's cheap. So like on Tesla, like they're expensive as heck, but it makes more sense to buy a $7 contract than it does to buy something for $3, because you're not going to get the movement you need these days to make it make a difference. I'd rather get one $7 contract and hopefully it bumps up to 8 or 9, you know. Did that answer that, Vinay? Oh, or did you mean the volume here on the bottom, like down here? Because I don't even look at that. Cool. Thanks for letting me babble that long, man. I mean, that's pretty much all I've got. I hope it's my first time doing it. I'm still learning a lot. I hope somebody related with something. I'm going to keep plugging away at this account. If biggest thing that I've taken away from the last month of trading has literally been trade within your bounds, trade within your skill set, and trade within your account limitations. And right now I'm a small account trader. Thanks, Raymond. Thanks, guys.
That's awesome, Dustin. Thank you so much. That was brilliant. Every single bit of it was brilliant. You're awesome, bro. You got this, man. You're doing a great job.
I appreciate that, guys.
Anyone got questions? Questions for Dustin, guys? Here's your chance. That was brilliant.
They might change the PDT rule from 25 to 2K. 3 trades per day. I try. Yeah. Because I'll be honest, man, MJ, I hate losing. I know the best loser wins, but yeah, I still hate it. I think we all do. So if I'm down 3, Like I'm kind of, that's one thing I didn't touch on. I'm happy I don't have more buying power. One of the biggest things in the back of my head as this account grows is what I'm going to do with more buying power, because I haven't really had to face the over trading because I don't have the option. So will I be able to maintain the same level of discipline when I can go enter another trade and I'm down what I would consider my max 9%? So those are things that definitely stay in my head. But yes, 3 trades a day is what I shoot for, MJ. So $2,000 PDT rule. So that would mean I could have a margin account at $2,000. That'd be sweet. That'd be super awesome, to be honest. Remember, with a cash account, that rule doesn't play into it. I just, when I run out of buying power, and I'm out of buying power, at least in the United States. I don't know how it works everywhere else. But I only run into trouble if I were to try to have a margin account. So if I get to $30,000, God willing, then I would honestly switch it over to a margin account. Yeah. So, but that's cool to know. I mean, I don't know if they'd give margin on a $2,000 account. I feel like that's too much trouble to get into for that small of an account, right, Avi? Like with that much leverage?
Yeah, that's what I understand. But again, I don't really know either. I've never dealt with that. But a very good point is you just don't want to have that much buying power. It's a good thing. I do the same.
Yeah.
I limit my buying power. I reset my account every week.
Yep.
I don't keep all that sitting there in the day trading account. No way.
If I can get it to 10, that's probably going to be my cutoff. And anything over that, in my head, like if it plays out the way I want it to and we continue on this journey, like my goal is to get it to 10. And then I, like, daydreaming wise, I would like to draw out of it to keep it at 10, so I don't have that kind of buying power. 100%. Yeah, I don't like that action. Not yet. I'm not there. And that's where I have to be honest with myself. Like I'm not ready for that. So
awesome.
And by the way, the last thing to say, like when we talk about distractions and trying to set your perfect environment, I was really, really obsessed with perfection of my mindset and my environment and all that for like 3 years, man. What it made me realize is I just wasn't there yet. Like I got music going on. I got a restaurant going on. My guy's monitoring the fire. He sent me like a couple little messages on here. Like there's so much stuff going on while I trade every morning. Girls are coming in filling mop buckets. Like it doesn't faze me anymore. And I think it's because my comfort level has gotten to the point with what I'm doing to where all the stuff you spent years worrying about, I think that there's just something to say that it truly is an experience thing. As you go through rep after rep after rep after rep, all those little things I used to obsess about get less meaningful. Like if you'd have told me I would trade in a mop closet and be better than I've been in the office I had, like I'd have never, and it may turn tomorrow, but I'm going to figure out why. And then I'm going to figure it out and get back in there and turn it back on. So that's one thing I'll say. I think trading is all about reps, and then I'll shut up from there. So if you're feeling uncomfortable, just keep getting reps, man. And if it's costing you too much money, get your reps in a simulator. Doesn't matter. Like you're not going to make money for a few years anyway. Might as well just simulate. I would give anything to simulate and have that 50 grand back, because now I'm ready. Like I'd love to play with it, or at least 10 grand of it, So.
Awesome. Brilliant stuff. Brilliant stuff. Very inspiring, man. Seriously, you've gone through your journey and you've come through it. You've learned a lot about yourself, and that's the biggest thing. That's what trading's all about, really, truly performing. You got to elevate as a person, and then your trading elevates. And,
trading has changed my life exponentially. And though I'm not a perfect person, none of us are, the mindset training and just the amount of self-introspection that's gone into this career path is probably my favorite part about trading. It's not even the trading. Even if we start changing our lives fiscally, like what this has done for me personally and mentally, like it's pretty cool. So I want that for everybody. And I want us all to like get filthy rich too, but it's fun. Money's fun. Like I want us all to kick ass. So yeah.
Brilliant. Love it.
Appreciate you guys, man. Thanks for letting me chat everybody's ear off, guys.
All righty. Fantastic. Thanks, Dustin. Thanks everyone for hanging out. I'll stop the recording here and we can
Cool.
continue the conversation in the Discord, in the voice channel. So
Thanks,
come on
guys. I
in.
appreciate everybody. Hey, no, thanks you guys, man. I was nervous as hell. I appreciate y'all. I kind of patched it together. So thank y'all for hanging with me.
Great, man. That was good. Good presentation.
Appreciate you guys, man. Thank y'all. Appreciate y'all.